Hello everyone, welcome back to this week's Technical Insights. Global equity markets had another positive week heading into the second week for second half of 2024. Investors are starting to embrace some stocks outside of the technology bull run as we begin the second quarter earnings seasons. Last Thursday, S&P 500 posted its worst day since late April, dropping 0.88% as investors sold the big tech winners in a major market rotation that pushed Nvidia lower by 5.6%. However, the 30 stocks Dow Jones Index was the outperformer that day, inching higher by 0.08% during the sell-off in the two other major US indices. On Friday, investors piled into Dow Jones industrial names on hopes that the slowing inflation would be followed by a Fed rate cut in September. The catalyst was none other than the Thursday report showing that the consumer price index declined by 0.1% in June. Before we go further, let's have a quick look at how the global markets have ended last Friday. Our Singapore Straits Times Index closed higher on Friday, up by 22 points or 0.65%. In Asia, Hong Kong Hang Seng Index jumped 461 points or 2.59%, while Japan Nikkei 225 Index fell 2.45%. On the track of currency intervention, spurred profit-taking ahead of a long weekend. In the US, the Dow Jones Index advanced 247 points or 0.62%, hitting a fresh all-time high of 40,257 points on Friday, before closing just slightly above the 40,000 mark. The S&P 500 added 30 points or 0.55%, also hitting a new all-time high to 5,655 points before closing lower. The NASDAQ composite index was the best performer on Friday, gaining 115 points or 0.63%. Nvidia bounced back on Friday, up 1.4%, as investors could not resist their favorite tech names that had sold off the day before. The S&P 500 gained 18% so far this year, largely led by the technology stocks. The tech sector has jumped 33% in 2024. On the weekly view, the Dow Jones Index rose 625 points or 1.59% to finish a tad above the 14,000 handle. The S&P 500 Index gained 48 points or 0.87% for the period to 5,615 points, posting a new all-time high but was unable to secure another record close. Tech-heavy NASDAQ Composite Index added 45 points for the week or 0.25% to 18,398 points as the tech rally starts to broaden out to the other sectors of the market. Fed Chair Jerome Powell testimony last week and the CPI report reminded investors that the rate cut catalyst can boost other sectors as well. The Russell 2000 Index, which tracks the smaller companies in US, jumped 6% for the week after a 1.1% gain on Friday. In Asia, Hong Kong Hang Seng Index gained 493 points or 2.77% for the week to close at 18,293 points. The Hang Seng Tech Index added 185 points or 5.15% for the period to 3,782 points. Last Thursday, the China Securities Regulatory Commission, or SCRC in short, announced further curbs on short selling to bolster the market sentiment. As a result, Hong Kong stocks jumped. The SCRC announced that lending for the short selling would be suspended, while margin requirements would be raised for short sellers as well. Week to date, our STI index jumped 86 points or 2.55% to finish at 3,497 points, 3 points short of the 3,500 mark. The increase was led by the surge in prices of interest rate-sensitive real estate investment trusts and property stocks. Mapletree Pan-Asia Commercial Trust climbed 5.5% or 7 cents to $1.34, taking the title of the top-performing stocks on the STI last Friday. In-flight caterer and ground handler SATS also jumped 5.4% or 17 cents to $3.29, a new 52-week high. So let's move to the charts and analyze both counters to see if their rally is likely to continue in the next few weeks. First, let's have a look at Mapletree Pan-Asia Commercial Trust, or what we call MPAC in short. MPAC share price has been on a downtrend since the beginning of the year. Last Friday, the REIT jumped 5.51%, bringing their weekly gains to 8.94%. This breached the upper bound of the Bollinger Band. This is the white line that you see here, which is around the $1.30 level. This is also above the red color line, which is the 200 days moving average at $1.31. Breaking above the long-term 200 days moving average is a strong bullish signal, indicating that the uptrend may be sustainable. Year-to-date low we saw was at the 19th of April at around $1.16, with the year-to-date high at the beginning of the year at $1.53. The immediate resistance for MPAC would be the 9th of April high over here at $1.36, with the next resistance level at the 19th of February high at $1.41. Support levels can be found at the 200 days moving average, the red line that you see here at $1.31, or even the 100 days moving average, which is the blue line that you see here at $1.26. Looking at the indicators, the MACD is showing strong positive momentum with a prominent divergence of the MACD line above the signal line. The latest RSI reading at 53 has also breached above the 50-point neutral level, showing that the uptrend momentum is increasing. So with both indicators looking positive for now, a long position on MPAC would be preferred using the 200 days moving average or the 100 days moving average as key support level, with the target around the immediate resistance level of $1.36, which is the 19th of April high, or the $1.41 high at the 19th of February. Next, let's take a look at SATS. SATS share price rose 5.54% or 17 cents on Friday to $3.29. For the week, the stock jumped 11.53%. So for the past 2 weeks, SATS share price has jumped around 15%. Since the beginning of the year, SATS share price has been range-bound, trading between the $2.99 level on 11 June high and the low of $2.40 on the 19th of April. SATS share price started to break out above the $2.99 level last week on Tuesday, when it touched a high of $3.07 before closing around the $3.04 level. Last Friday closing price of $3.29 has hit a new 52-week high and breached the upper bound of the Bollinger Band at $3.16. The previous time we saw SATS trading around this level was in the September 2022 period, and the next resistance level could be the $3.70 level we saw on the high of 27 September in 2022. For key support levels, the high on 11th of June at $2.99 could be a resistance turn support level, and the 20 days moving average, which is the white line that you see here at $2.94, could also provide further support for SATS share price. On the indicators, the MACD is showing very strong positive momentum, with the MACD line diverging away from the signal line upwards. On the RSI, the latest reading at 83 has breached above the 70-point overbought level, indicating we may see a reversal soon. So with contradicting signals coming from both indicators, investors will need to exercise caution when chasing the current rally. A more conservative approach would be to wait for a pullback towards the 11th of June high at $2.99 or towards the 20 days moving average at $2.94 before considering a long position targeting the current high at $3.29. And these are the updates that I have this week. So if you find this information useful, do remember to like, share, and subscribe to stay updated with the latest market developments. And I'll see you again next week in the next Technical Insights.